This is Matthew Cratter from Trader University, and today I want to answer the question, are Bitcoin maximalists dumb and close-minded? You see this often in my comment videos. You are a Bitcoin maximalist, or this person said Bitcoin maximist, lol, followed by 10 exclamation points. Here's another one where I made a video back in August of 2020 warning people how dangerous it was to hold XRP because they had basically issued unregistered securities and they were going to be sued by the SEC, which ended up happening. Unfortunately, this video fell on deaf ears for the XRP army. A lot of comments like this, I can't even fathom being this dumb. Clearly, these Bitcoin maxis are going to the bathroom on themselves, blah, 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 and that we were scared. Now, I should start by saying that calling someone a name is not a substitute for actual thinking. And you'll find that a lot of people who use this term Bitcoin maximalist, they can't even spell it. And they use it as a convenient way to excuse themselves for doing the really hard thinking that needs to be done when you enter a new space like cryptocurrency that's only 10, 11 years old, really, since Bitcoin. First thing I should say, and that anyone who's been on Bitcoin Twitter knows that Bitcoiners are a very intelligent group. This is obviously not the real Satoshi Nakamoto. This is the image. This is Dorian Nakamoto. It's often used as an image for him. We don't know who Satoshi is. But if you read Satoshi's emails, you read his white paper, you realize that this is really one of the smartest guys who has probably ever lived. I would say I'd put him maybe at 75% of a Leonardo da Vinci type. Also, just on Bitcoin Twitter, people like Adam Back, Pierre Rochard, you could go into a whole list of these guys. They're anything but dumb. They have very high conviction, and they've been through a lot of tough times, great bull markets, and also extremely painful bear markets, and constantly, especially in the early years, had to labor under the fear that they would be banned, that the government might ban Bitcoin. A lot of these people had their bank accounts shut down for trying to buy Bitcoin. Now, people like Bitcoin maxis because you can do the obvious pun, which I'm not going to say. Bitcoin maximalist was coined by Vitalik Buterin probably in this paper from 2014. Basically, Bitcoin maximalist is saying that it's wrong to launch yet another coin. This is not really the critique. The critique that Bitcoin maximalists make is that so many of these people, Vitalik included, basically print up private money for themselves and their friends. And the original Ether pre-sale was obviously conducted using Bitcoin. So you send them your Bitcoin, your precious Bitcoin, and you get back some ETH. Vitalik and his buddies at the Ethereum Foundation get to keep the Bitcoin, and then we do know that Vitalik has sold off at least 25% of his ETH holdings. So these people have they have an agenda, and their agenda is to take your Bitcoin and to give you an inferior cryptocurrency in exchange for it. If you're finding this video helpful so far, I'd encourage you to hit that subscribe and like button. Also share it with a couple friends if you can. That would really help out the channel. Now, when it comes to being a Bitcoin maximalist, unfortunately, the market itself is Bitcoin maximalist. Bitcoin has a market cap of 1.1 trillion. The closest trailing competitor, Ethereum, has a market cap that's a fifth of that size, roughly at 212 billion. Now, if we look at the top 10 coins, if you've been following this for a while, you know that these names are always changing. Bitcoin, Ethereum are usually at the top. Bitcoin's always at the top. And then you have various coins that are changing at different points in time. A couple months ago, we still had Bitcoin Cash and Bitcoin Satoshi's Vision, BSV, in the top. They've now fallen off the cliff. They've been replaced by things like Polkadot and Cardano, and obviously Binance Coin, etc. But this top 10 list is not consistent, and it's always changing. The only thing that's consistent is that the market remains Bitcoin maximalist. It continues to award the largest market cap to Bitcoin and treat this as its most valuable one. Also, it's a little bit misleading because most of the Bitcoin that is going to be mined has been produced. We're at about 18.7 million Bitcoin out of 21 million, whereas many of these have a huge overhang. For example, XRP, there's just a huge overhang in escrow that can be dumped on the market and will be slowly dumped on the market. And so the amazing thing about Bitcoin is it's trading. It's very liquid. Most of the Bitcoin have been mined, and it's still able to maintain this very large market cap. I like this diagram. This is a chart of all the top, call it 2,000 coins, cryptocurrency coins that have come out. The black line is obviously Bitcoin. Bitcoin is the clear winner, and then you have all these different little wiggly lines here. These are all coins that have come and gone, and what we can really see is how they are drawn toward the zero line here. They're very mean reverting. Altcoins are very mean reverting, and this is one reason that this top 10 list is always changing. But the one thing that you do know is that if you buy one of these altcoins, the probability is highest that it will go to zero, or it will go down at least a lot from where it's been released. So you can see that there are lots of coins that get that start up here, and then they all tend toward the x-axis. The other problem, obviously, with all these other cryptocurrencies is that they're actually quite centralized. Ethereum has Vitalik running things. You can apply pressure to him. You can put him in jail. You could kidnap him. Governments could apply pressure to him, etc. And this is true for all the coins except for Bitcoin. It's really funny when you see headlines like this. Here's a decentralized platform that's being sued by the U.S. government. Well, how do you sue something if it's decentralized? Obviously, there's a corporation behind it, and this is what the U.S. government is suing. There's no one to sue with Bitcoin. It's completely decentralized. The full nodes are spread around the world. The Bitcoin miners are spread around the world, and the community itself of Bitcoiners is spread around the world. Satoshi Nakamoto, the creator of Bitcoin, has disappeared, so there's no analogous situation with Vitalik. So the other point I should emphasize, and one reason that I think that Bitcoin is always at the top here, the reason that CoinMarketCap, the website, is Bitcoin Maximalist, because it always puts Bitcoin first, because that's where the market awards all the value. Bitcoin solves the store of value problem. Store of value is one of the basic functions of money, along with medium of exchange and unit of account. And store of value is basically just a way of preserving your purchasing power. So if you've worked hard, you made some money, whether it's $100 or $100 million, you have a right to maintain the purchasing power of that without being diluted or devalued by central bank money printing. Everyone knows that the price of things goes up over time. McDonald's hamburger used to be about 50 cents in the 70s. Now it's closer to $5. So that same dollar, or that same 50 cents, if you stored it under your mattress, you would not be able to buy a hamburger 30 or 40 or 50 years later. So historically, gold has been a good store of value. It has not been a good store of value for the past 11 years. It's failed to keep up. And one of the main reasons for that is the creation of Bitcoin, which is stealing market share, not only from gold, but from other stores of value. Now, the thing about Bitcoin, you'll often see people in my comments say, well, Bitcoin's just a store of value, but my coin can do this or that. Well, store of value is really the largest category in the world. It has the largest total addressable market, largest TAM, simply because this is you don't get a more fundamental category when it comes to money. You could have software that does this, software that does that, software, a cryptocurrency that helps you keep track of inventory, a cryptocurrency that allows banks to send stuff back and forth, etc. But store of value really is the largest category, and it's in the hundreds and hundreds of trillions. When a scientist discovers a cure for cancer in 30 years from now, he will store some of his newfound wealth, or the corporation that discovers it will store some of its newfound wealth in Bitcoin. Bitcoin is a place to store not only today's wealth, and we can see billionaires, corporations, pensions, endowments, even sovereign wealth funds moving into Bitcoin today. But Bitcoin is not just a place to store today's wealth, but all of the wealth that will be generated in the future. It's important to remember a lot of people think there's a fixed amount of money out there or a fixed amount of wealth. There's actually not. Wealth is a zero-sum game. If you paint the Mona Lisa, you've made the world much wealthier and much richer, and you didn't take that from anyone else. It's not like Leonardo da Vinci stole something from someone else, but he basically created many things that were new and beautiful. If I write a software program that indexes the entire internet, as Yahoo did and then Google did after them, I've contributed to the overall wealth of humanity. This is one reason that the founders of Google are obviously so wealthy, and a lot of this wealth accrues to mankind in general, in addition to accruing to the billionaire founders. If you discover antibiotics, for example, you've made everyone wealthier. You've increased their lifespan, etc. We're ignoring, of course, the problem of bugs that can be made antibiotic resistant, etc. But you get the general idea. When you're young, most people think that wealth is in limited supply, and somehow rich people have taken all of it and are not sharing it with anyone else. But we can see that someone like Mark Zuckerberg comes out of nowhere, writes some software, and he's created wealth for himself. So Bitcoin is a place to store your wealth, as I said, whether you have $100 or $100 million. And Bitcoin is eating all of the other stores of value. We have this famous Mark Andreessen quote about how software is eating the world. Well, Bitcoin is software as a store of value. It's very easy to send Bitcoin anywhere. It can't be censored. You don't need anyone's permission to do it. And it's also very easy to store for the long term. And it doesn't just preserve value, but it also goes up in value and increases your wealth. Now, store of value is I believe it's a winner-take-all category, and simply because it benefits from network effects like Google. And Bitcoin, like software, is eating the world. It now has a market cap, as we said, of about 1.1 trillion. In probably by early summer or midsummer, it will have a market cap that's greater than Apple. Apple is obviously a place where a lot of people store their wealth, especially their retirement wealth. If you own a retirement account and you own some index funds, a lot of that money it's obviously market cap weighted, so a lot of that money is in companies like Apple and Amazon, etc. Gold has been a good store of value. Historically, has not been a good store of value for the last 11 or so years. And we're actually seeing a lot of hedge funds and high net worth individuals selling their gold and buying Bitcoin. This is what I did last year. I sold all my gold royalty stocks and bought Bitcoin with it. So these are different categories of store of value that are being eaten by Bitcoin. The really big ones are real estate. These are just approximate numbers, 100 trillion for real estate and 100 trillion for bonds. So when you get into store of value, you realize like this is the real market that you want to capture. And the nice thing about owning Bitcoin is it's on its way to capturing this global market, the store of value market. Why store your wealth in real estate when you can store it in Bitcoin? Gold is an outdated money technology. Why store your earned wealth in gold when you can store it in Bitcoin? I made a couple videos about this, showing how Bitcoin is a much better substitute for having an empty $50 million condominium in New York City, for example, how Bitcoin is eating luxury real estate. We can see it very clearly, too, if we look at charts of Bitcoin denominated in gold or Bitcoin denominated in NASDAQ stocks. Bitcoin is stealing market share from both of these stores of values. And this is why the charts are straight up, because Bitcoin is taking market share. And this is one reason that gold has been underperforming for 11 years. Even this year, the NASDAQ is really underperforming. The FANG stocks are underperforming, and Bitcoin is really outperforming. So Bitcoin steals market share from gold, from real estate, from stocks, and eventually from bonds. Who wants to own government bonds that are negative yielding or very low yielding and that pay an interest rate that's below the rate of inflation? This is how you destroy your wealth rather than rather than preserving it. And this is one reason that pension funds and endowments and insurance companies, etc., will need to diversify out of bonds. And they've already begun to do it. Mass Mutual, very big and conservative insurance company, buying Bitcoin last year. Finally, we have the other critique. So Bitcoin's very nice. It's a store of value. It's got the lead. It is going to win the store of value category, which is hundreds of trillions of dollars, which means that we see very high-priced Bitcoin. Bitcoin at 10 million, Bitcoin at 20 million per Bitcoin, etc. The problem with most cryptocurrencies is that they are basically utility tokens. Utility token you can think of as being like a Chuck E. Cheese token. You just use it within the restaurant to play video games. These have since been replaced with digital plastic cards, I think. But either way, this is what utility tokens look like. And the thing about utility tokens is that it's very unclear that any value, even if they're used a lot, whether they will accrue value. This is because it's very easy to fork an existing utility token blockchain and then run it at a lower cost. All these blockchains are open source. That's the whole point of them, being an open source protocol, which means you can copy them and run them yourself at a lower cost. And then what will eventually happen is you'll have these competing networks. The value of the network will fall until it hits the cost of the computational costs involved. So basically electricity and hardware. So just because something's useful doesn't mean that it's a good store of value over time. Bitcoin's very different. Bitcoin is something you put on your balance sheet, whether you're an individual or corporation, and you try to keep it for the long term, just like gold or real estate used to be used. Utility tokens are more like gas, and this is, of course, the term that's used in Ethereum, gas. Utility tokens are more like a utility, like gas or inventories, and this is something that companies and households are incentivized to hold as little as possible because you basically tie up capital in them. So when you leave Chuck E. Cheese's, you try to get rid of all your tokens. It's not something you want to keep. Though ironically, these tokens, as I've said in another video, have become quite valuable simply because they're now scarce. So you can buy a token that used to be worth 25 cents within the store for almost $6 now on eBay. This is because they're scarce. And they're functioning here as sort of a store of value, not a very good store of value. But ironically, utility tokens only accrue value when they become scarce. And this is one of the real advantages that Bitcoin has, its absolute scarcity. The other thing I often hear is, well, I'm going to trade altcoins and then I'm going to use that to make more Bitcoin. I've talked about this elsewhere, but it's very, very unlikely that you can time it well enough to beat Bitcoin's performance, especially in a taxable account. If you have a good profit on one of your altcoins and you sell it, especially if you've held it for less than a year, you're subject to short-term capital gains taxes, etc., which means that the trading in and out really takes a lot away from your returns. By contrast, Bitcoin is something you can just buy and hold forever and then avoid paying taxes on it simply because you can borrow against it using a collateralized loan and then spend that money on whatever you want. I do cover that in this video, which I'll link to before. So I think when people say Bitcoin maximalists are dumb, this is certainly not the case. They're a very smart group of people. And closed-minded, if you read all the Bitcoin maximalists on Twitter and you really spend some time on this space, you'll see that it's not that they're closed-minded. It's just that they've seen the same trick again and again. If you offer me some junk food from McDonald's and then you offer me some junk food from a restaurant that I've never heard of, I know through pattern recognition just to write off the junk food, even if it's some local, really cheap burger stand that's not very high quality ingredients. I know what it is because I've seen it before. And this is the reason that Bitcoiners, they appear closed-minded, but they've actually thought through this issue with store value, how it's the largest category, it's the most important category, whereas all these altcoins usually have these centralized promoters who are just trying to print up money for themselves, excuse me, and dump it on unsuspecting retail investors. This is what Ripple XRP did. This is what Ethereum did as well, not to mention all the thousands of coins that are on that have been issued, most of which have basically gone to zero. They never go exactly to zero, simply because there are always people dumb enough to buy them for a few pennies per coin. But effectively, if you're down 99% on your investment in an altcoin, it's essentially gone to zero. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Especially you guys who like to call Bitcoin maxis names. Let's see your comments. It'll be very interesting. Thanks a lot for watching, and I'll see you in the next video.